This video is created by Jagrat Creation. It is on Amalgamation of Partnership Firm. I want to solve one sum on Amalgamation of Partnership Firm. Just observe the sum on the screen. This is the sum that I intend to solve here before you. Mr. Beal and Mr. Beal are partners in BW company. In a similar type of business, Mr. Beal and Mr. Gill are partners in MG company. It was agreed that on 1st of April 2017, old firms be amalgamated into a new firm, BMW Group. The respective balance sheet of old firms as on 31st of March 2017 are given to you. BW company, BW, MG company, these are the balance sheet given to you. Profit sharing ratio in old firm of Beal and Gill in the ratio 4:3. Profit sharing ratio in old firm of Beal and Gill 3:2. And in new firm, the profit sharing ratio is 6:5:4:3. The terms and conditions for amalgamation are: provision for doubtful debt at the rate of 12% is to be made on debtors. Rebate on liability of creditors is to be provided for 2%. So liability is to be taken at 2% less value because we are going to get because in new firm we shall earn the discount on payment to creditors. New firm take over the assets of the old firm as under stock, vehicle, furniture, land and building. But notice that furniture and land and building of MG Limited are not purchased. So this 40,000 and 5,600 are not purchased. Furniture and land and building not taken over by the new firm were sold for rupees 54,000 on 1st of April 2017 by MG company. Mr. Bill is to take over the investment for rupees 3040. Bank balance and overdraft are to be taken at the book value. The capital of the partners in the new firm were to be 1,80,000 to be contributed in the profit sharing ratio. Any adjustment is to be made in cash. You are required to prepare the books of old firm and prepare the opening balance sheet of the new firm. So this is a sum on amalgamation. Now the sum on amalgamation can be solved by two different alternative methods. One method wherein a revaluation account is prepared, the assets are revalued, revaluation profit or loss is transferred to partner's capital account, and in light of this revaluation, new balance sheet is prepared, and that balance sheet is sold to the new firm. So absorption entry of that balance sheet will be made in the books of new firm. That is one method. The second style of solving the sum is to solve by way of dissolution of the partnership firm. So here BW and company is sold to BMW. So BW is dissolved. This partnership firm is dissolved. And when the partnership firm is dissolved, in case of dissolution of a partnership firm, we prepare not revaluation account, but we prepare realization account. So the alternative method for solving the sum is to solve the sum by preparing realization account under the premises of dissolution of a partnership firm. So this sum I am going to solve by preparing realization account. So I am going to write down the entries of, and I am going to prepare the books of accounts of BW company by way of dissolution of a partnership firm, and I am going to prepare realization account. Same is the course of action is going to be followed by me for MG and company. But whenever we want to prepare a realization account, we should always find out the purchase price of the business. So at what price the total business is being sold. So in the first instance, I would like to work out the sales price of the business. After working out the sales price of the business, I'll prepare realization account and necessary account to close the books of accounts of the vendor firm. This is the course of action that I am going to follow. So in the first instance, I'll find out the sales price of the business of both the partnership firm. Let me start with that. Notice that furniture, land and building are not taken over by the new firm. So this is not taken by the new firm. So this is not sold to the new firm. That's an important point to be understood. Now here I prepare a calculation of purchase consideration. This is the information given to me in the sum. This is the sum in itself. Provision for doubtful debt, 5% to be made on debtors. So at what value the debtors are taken? See, the assets are taken. The debtors are 27,200. This 27,200 is the book value. But it is sold to the new company by providing reserve for bad debts to the extent of 5%. So, these are the debtors of two companies, BW and MG. I will calculate 5% thereof. That's a bad debt reserve, decline in the value of debtors. So, 27,200 into 5%, there is a bad debt reserve. So, debtors are sold at a price 27,200 minus provision for bad debt reserve 1360. This is the price at which the debtors are being exchanged. Same way. 5% of 23,200. This is the bad debt reserve. I deduct it, provision against the asset, I deduct along with the liabilities. So debtors are purchased of MG 23,200 minus 1160. This is the price at which the debtors are purchased by new company BMW Group. Now, second point, rebate on liability for the creditors. So creditors are purchased under a presumption that at the time of payment, at the time of making payment to the creditors, we are going to earn the discount. So here the creditors are recorded in the liability side. So liabilities to be deducted from assets and liabilities are going to be deducted. But the creditors are not purchased at a price of 20,800. It is subject to a rebate of 2%. So I will work out the rebate. So 20,800 into 2% rebate. So this is going to be deducted from the value of creditors liability. So 20,800 minus 4160 is the purchase price of creditors liability for a BMW Group. And vendor has sold this liability at an exchange value of 1360 minus 416. Similarly, rebate on creditors that I am required to work out on 24,000 into 2% 480. That also will be, so 24,000 minus 480 is the exchange value of the creditors. This is a provision rebate on creditors. So this is the likely discount that is going to be earned by a new firm, a purchaser firm, and that's why the valuation of liability is made at a discount. Now next, new firm takes over the assets of old firm. So stock is taken as 33,800 and 25,560. Vehicles are purchased for 11,200 and 5,200. Furniture of BW 6,400 and 40,000. This is the true assets purchased for land and building, and furniture of BW are purchased. That of MG are not purchased. That we have noticed while reading the sum. Goodwill, that is also purchased. Reputation. Now, on the basis of this, Mr. will take the investments. So investments are not sold. Bank balance and overdraft to be taken at book value. So here the bank balance will be recorded in asset and overdraft will be recorded in the liability. So this is how the assets and liabilities are purchased. So let me find out the value of business. The value at which the business is exchanged by a vendor firm to a purchaser firm, amalgamated firm. So here total of assets minus total of liabilities and provisions. This is the exchange value for BW firm. Similarly, total of assets minus liabilities and provisions. So this is the exchange value of MG Limited. So this is the price at which the MG Limited has sold its firm. Now after preparing this purchase price, I want to prepare the ledger accounts in the books of BW company. For that, I am required to prepare realization account, partners capital account. Let me start with that. So, in the books of BW, here I prepare realization account. Here, partners capital account, bill and bill. So, first step for the purpose of solving the sum is to copy the balance sheet. This balance sheet of BW vendor firm is given, that is dissolved. All the balance sheet values of assets to be realized are transferred to the debit side of realization account at its book value. And similarly, this capital balances will be transferred to capital account. Creditors also will be credited to realization account that I identify as copy of the balance sheet. So, first of all, I want to take care of BW company. So, here I write down the old ratio 4:3 and 3:2 for two companies. This is the new ratio after amalgamation that I write just for my reference. Now copy the balance sheet. Land and building debited to realization account. Furniture debited to realization account at its book value. Vehicles debited to realization account at its book value 12,000. Stock 33,200 debited to realization account at its book value. Investment debited to realization account 3,200. Debtors and bank balance is also sold. See, the bank balance is also sold. So bank balance is also realized. So it is transferred to the debit side of realization account. That's an important point to be noticed. I don't transfer this bank balance as an opening balance in cash and bank account because bank balance is sold along with all the assets of the business. So it is transferred to realization account. Capital of bill and bill recorded to the credit side. Creditors are credited to realization account. Now this is how copy of the balance sheet is done. Now, the assets and liabilities not sold to the new firm. Either they are disposed of in the market or they are distributed amongst the partners. After that, you can go for dissolution of the firm. So here in this sum, Mr. Bill has taken the investment. See, all the assets are sold, but this investment of 3,200 has not become the part of purchase consideration. So 3,200 is an investment asset which is not sold by BW to BMW. So this asset is not sold. So this asset is either required to be realized or if it is not realized and if it is a real asset, it is distributed amongst partners as agreed. If the agreement ratio or the agreed values are not given, in that situation, you should distribute either in profit sharing ratio or in capital ratio by writing a note for that. So Mr. Bill has taken the investment. So Bill's capital account debit to realization account credit. This is how investments realized. Now except investment, all assets are sold. All liabilities are also sold. Now this is a sales value. So this is the purchase price of the business for a purchaser company. This is a sales price for a vendor company. So this sales value will be credited to realization account and that sales value is to be recovered from BMW Group. So now I am required to write down 1,35,655. BMW Group is the receiver of my business. Debit the receiver. So BMW Group account credit to realization account credit. So this is the realized value credited to realization account. And the amount to be recovered from BMW Group is debited to BMW Group account. After this, I am required to close this realization account. Total of credit side minus total of debit side, there is a realization profit. That profit will be distributed between bill and bill in the ratio of 4:3. So, distributed in the ratio of 4:3, this is a profit 33,496. 4:3, 4/7 is the share of bill. Share of bill is 3/7 and that is credited to the partner's capital account. So realization profit is credited to partner's capital account. So all the assets to be realized are transferred to the debit side of realization account. Realized value credited to realization account. Profit or loss on realization of business, on sale of business, is transferred to the partner's capital account in the profit sharing ratio. This is the amount to be recovered from the new company. Now this is a sum of amalgamation. Both these partners are going to be the partners in the new firm. So their capital balances are transferred to BMW Group. So total of capital balances 80,341 minus 3040. This will be transferred to BMW Group account. 58,355. This is the balance that is transferred to BMW Group account. So this will be the capital contribution of these two partners in a BM group, and this is the exchange value for transfer of business to be collected from BMW group. So this account should tally. So this is how the ledger accounts in the books of vendor firm are prepared under a dissolution premises, wherein realization account, partners capital account and new partnership firm account is being prepared. This is how the ledger account gets prepared in the books of BW and company. Now same way, I want to prepare the ledger accounts in the books of MG company. Now this is the company for which I want to prepare ledger accounts. Here also I am going to prepare realization account, partners capital account and the purchaser firm account. So this is my realization account. This is partners capital account, BMW group. Now first step is to copy the balance sheet. All assets to be realized are transferred to the debit side of realization account. Here I have also prepared bank account, so copy the balance sheet. Land and building debited to realization account. Furniture debited to realization account. Stock, vehicle stock, debtors, all these assets are transferred to the debit side of realization account. Now capital, meal and gill, creditors and bank overdraft credited to realization account. Now you know that these two assets are not purchased by the new company. New partnership firm has not purchased two of assets. They have to be realized. Look at the note. This is the sales value recoverable from BMW. So BMW group account debit to realization account credit. Now furniture, land and building not taken over by the new firm are sold for rupees 54,000. So bank account debit to realization account credit. Now this bank balance will be distributed amongst partners in the ratio of their profit sharing. Meal 3:2 is the profit sharing, so 3/5. Gill 2/5. So this is the manner in which the cash balance is distributed amongst partners. Now after doing that thing, close realization account. Find the profit or loss on realization account. This will be distributed amongst partners in the ratio of 3:2. So this is the profit, 22,880. Total of credit minus total of debit, 22,880. That will be distributed in the ratio of 3:2. So 3/5 that of meal and 2/5 of gill, that is credited to partners capital account. Now these partners capital accounts are closed and transferred to the BMW group account. Why? Because these two partners are going to be the partner in the new firm. So their capital contribution in the new firm is equal to 26,528 for meal is the capital contribution in the new firm, and same way the capital contribution of gill is 17,152. So this is the capital contribution, and this is the exchange value recoverable from the new company. So this exchange value is identified as capital contribution in the new firm. So this is how BMW group account should tally. So this is how the ledger accounts in the books of MG company are prepared. Now after preparing the ledger accounts in the books of vendor firm, now I want to write down the journal entry for purchase in the books of BMW. So this is the ledger accounts of MG. I have already prepared the ledger accounts of BW. Now I want to write down the journal entries in the books of BMW, and I'll also prepare the balance sheet in light of given information. Now let me do that. So this is the balance sheet to be prepared. So debtors recorded on the asset side. Then creditors, from creditors the rebate on creditors will be deducted. Total of stock in the books of new firm 33,800 plus 25,560. Vehicles, total of these two 11,200 plus 5,200. This is how it will appear in the balance sheet. This is the furniture land and building purchased at 40,000. Now goodwill. This goodwill I am going to write off in the new profit sharing ratio. So I don't write this goodwill in my balance sheet. Notice it. Bank balance. Creditors minus rebate on creditors. This is bank overdraft. Bad debt reserve will be deducted from debtors. Now this is the capital that I write in my working note. Now goodwill is required to be written off in the new profit sharing ratio 6:5:4:3. So if you write off 43,200 in the ratio of 6:5:4:3, you will find the distribution 14,400, 12,000, 9,600, 7,200. So 43,200 is distributed in the ratio of 6:5:4:3. So this is the goodwill written off in the books of new firm. So this is the balance of capital account after writing off of goodwill. Now you are told in the sum that in a new partnership firm, after amalgamation, the total capital, the capital of the partners in the new firm were to be 1,80,000 to be contributed in the profit sharing ratio. Any adjustment is to be made in cash. So this 1,80,000 is required. 1,80,000 is the required capital, and that capital should be in the new profit sharing ratio. So let me find out how much capital of each partner should be in the new firm. So 1,80,000 in the ratio of 6:5:4:3. If you make a total 6 plus 5, 11 plus 4 plus 11 plus 4, 15 plus 3, 18, 1,80,000. So 60,000, 50,000, 40,000, 30,000 is the required capital. So 62,901 is the capital of Bill. Required capital is 60,000. So his capital is in excess. So he will be given a refund of 2,901. Here the capital of Bill is 46,355. Required capital is 50,000 more than 46,355. So Bill is required to bring 3,645 into the partnership firm. Here the capital is 16,928. Required capital is 40,000. So Bill is required to bring cash of 23,072. Same way, Gill is required to bring this much of cash. So this is the cash to be brought by the Will, Mill and Gill, and this is the cash to be given to Bill. Now, what is the effect of it? The cash received from Bill, Mill and Gill, paid to Bill. So this is the cash balance. And the capital that I am going to write in the balance sheet is the required capital, 60,000, 50,000, 40,000 and 30,000. This is the capital, 1,80,000. This is how capital will be recorded in the balance sheet. Now after recording all these things, have a total of balance sheet. Total of assets side is 2,27,504 and total of liability side is also 2,27,504. This is how balance sheet of a purchasing firm, new partnership firm that comes into existence, its balance sheet is prepared. Now, on the basis of this, if you want to write down the journal entry in the books of new firm, that also can be very comfortably recorded on the basis of this purchase consideration statement and this working note. So, all the assets purchased are debited to asset account. This reserve and liabilities are to be credited, and the capital of Bill and Will be credited with 77,301, and this is the capital account is to be credited. Similarly, if you want to write down the journal entry for purchase of MG and Company, debit all assets, credit all these liabilities and credit this capital account. Then write the entry to write off the goodwill in the new firm. So Bill, Mill and Gill account debit 14,400, 12,000, 9,600 and 7,200 to goodwill account credit 43,200. This is the cash brought by the partners. Cash account debit to Bill account credit 3645. Cash account debit to Mill account credit 23,072. Cash account debit to Gill account credit 20,048. and bill account debit to cash account credit. This is a cash entry that you can record. So this is how the journal entries could be recorded on the basis of this purchase consideration statement that has been prepared and on the basis of this working note. I have already prepared balance sheet here before you. This is how the sum gets solved in the books of new firm. So I have tried to explain you this sum, wherein amalgamation is accounted for by mode of dissolution, wherein realization account and partner's capital account is prepared. As I told to you, the alternate method to solve this sum is to prepare revaluation account that has already been explained by me in my previous video. So you can refer to that method. You can refer to the revaluation method in the previous sum that I have uploaded on YouTube. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to all.